Okay, I'm going to start with revealing 4 common trading myths. And we'll show you why they're myths and what the truth is about them. Myth number 1 is general, which is that trading is bad and investing is good. Now, I don't know how many of you have heard similar statements, but, if you tell somebody who's into, standard investing, the buy and holders, and say, like, I'm a trader, that, oh, you're one of those. It's like, it's kind of politically incorrect or whatever. But to dispel that myth, the truth is, except for buying an IPO, a, quote, investor, unquote, is really trading. You see, because they buy and eventually they sell. Of course, if they never sell, then they've never made anything. But it's just a matter of time frame. Both a trader and investor have identical intents to make a bet that something will appreciate in the future. Same exact thing. The truth of this myth is that the trading and investing are identical except for the usual time frame a position is held. And that's it. There is no other difference. All right, so that's myth number 1. Myth number 2 is similar, which is that trading is risky and dangerous. I don't know how many of you have heard that, but I hear that all the time. Okay, now here's the truth about that. Driving a car is dangerous if you've never been behind the wheel. Performing surgery is dangerous if you have had no medical training. So the truth of this is that trading is only dangerous if you're not properly trained or don't know what you're doing. And it's that simple. Yes, trading is dangerous, as is many things, if you don't understand it and don't apply the right techniques. Okay, myth number 3. The only sure way to make money on stocks is to buy and hold for very long periods of time. Boy, I hear that almost every day with some pundit on CNBC. The buy and holders. They insist that this is the only way. To do otherwise is reckless and you're sure to lose. Okay, now let's take a look at the main sources. This is probably the most predominant myth that's ingrained in people's minds. Let's take a look at the main sources of this myth. The first thing is these buy and holders really like to tout the 100-year chart of the Dow. And I'll show it to you. That is the last 100 years of the Dow Jones Industrials. Now, notice that, yes, in the last 100 years, it ramps straight up, right? So they always point this and say, well, you see, the market always goes up. Okay, there's one slight problem. Actually, there's a couple of problems. Number one is that did you have 100 years to invest? No, of course not. So that's absurd. Number 2, what happens if you would have bought at the wrong time? If you bought here in 1929, if you were alive, it would have taken you a good 30 years before you would have been above water. Had you bought here, it would have taken, after 15 years of holding, you'd be flat. If you bought back in 2000, you'd be barely up, you see. So who has this kind of time frame? Almost no one. Okay, so that's number 1 problem with this 100-year chart scenario. Another problem is that the Dow, the Dow changes every several years. The Dow today is not the same index as it was 30 years ago. So you got to think about that. If you think you're being an avid buy and holder, and you buy the Dow and you hold it for your grandkids or whatever, you got to understand that you're inside the Dow is trading, because the Dow shifts and changes every so many years. And so even in that case, you're not really buying and holding. You don't have the same stocks as you had 10 years ago. Okay, so that's a minor point, but that's a point that needs to be made. Now, here's the second source of the myth that the only way to make money is to buy and hold. And that's that most people that aren't into trading or whatever, they own things like mutual funds. Now, the problem with that is, well, it's not a problem, but the reason that myth is perpetuated is because the mutual fund has a tendency to gain over time. And so the buy and holders will say, well, you see, you held that nice portfolio, your retirement fund or what have you, and over a 10-year period, it gained really nicely. Aha, but here's the problem, is that the stocks inside that fund are managed, which is a fancy word to say traded. Now, granted, these mutual fund managers don't trade like you and I do, you know, like every day or every week or whatever, but they are still traded. The stocks shift every so often. I actually knew a guy that managed several $1 million in a private stock firm in Portland, and she said his whole portfolio would shift 2 or 3 times a year. That's not buy and holding, but he would do very well with that. And so these guys are trading inside your mutual fund. Now, still another big source of the buy and hold myth is that their stories are told all over the place of these fantastic gains. We've all heard stories about those who held IBM shares from the 50s or Microsoft shares from the 80s, and they still hold these for thousands of % gains. You know, those stories are true, except for every IBM or Microsoft share, there are hundreds of companies that went nowhere or even went bankrupt.